up front. I'm very happy for audience participation, so welcome anyone to come further up. We're here today to talk about nature-based solutions for net zero, and I'd like to introduce my panel today. I'm welcomed by an expert panel from Australia. I have at the far end Anna Hancock from Pollination. Next to her is Alex Matthews from Commonwealth Bank. Stephanie Russo, who is from Carbon Growth Partners, and it is also Stephanie's birthday today, so just a little call out for her. We also have, just next to me here, Alyssa DeVitt, who's many years of experience in the legal profession working in the Australian Carbon Credit Unit framework. So without further ado, we might get started. And I just wanted to give some framing context, I think, around the topic, particularly given the context we're here at COP28, which is obviously looking at the climate emergency that we're currently facing, but we're also facing a nature emergency, and we really need to critically triple investment in nature by 2030. So that's really where bringing nature-based solutions into the picture is the sweet spot, because nature-based solutions not only deal with the climate emergency but also address the nature and biodiversity emergency as well. So really, I think we need to talk about failure to adopt sustainable practices and investments, putting businesses and our economies at risk. More than half of the world's GDP, so about 44 trillion, is an immediate risk due to nature loss. So it's fairly significant. And you know, under the COP28 framework, we're looking at the Paris Agreement. We just recently had the Kunming-Montreal Agreement for biodiversity. So really addressing those two together is the role of nature-based climate solutions. So for those who aren't familiar with nature-based climate solutions, it involves conserving, restoring, or better managing land and ecosystems to remove CO2. If we look at the IPCC 6 report, one of the key climate solutions that was identified to address address the 1.5 temperature goal is to sequester in agroforestry, afforestation and reforestation. So really pinpointing the role of nature as a carbon sink and the critical role of protecting and conserving our natural environments. So nature-based solutions could deliver up to 1/3 of net emissions reductions required by 2030 on a global pathway to net zero, according to McKinsey, who Alex apparently used to work for. Nature-based solutions are market-based mechanisms, so we will run a little bit through the framework afterwards, and I'll hand over to Alyssa to talk about the framework within Australia, which is the Australian Carbon Credit Unit framework. What's critical, I guess, about carbon markets and market-based mechanisms is that once the carbon has been traded, once the carbon has effectively been stripped out of a project, nature-based solutions are legacy projects. So what should remain, are the enduring outcomes or positive attributes from projects. Well, we call them co-benefits, and those are environmental, social and economic co-benefits. Others, and probably Rowan Foley, if anyone was here at his presentation before, talk about them as core benefits. So, you know, depending on what angle you look at, we're obviously coming from the carbon market, so they to the projects that we're talking about, but they are core to these projects because they are the enduring and lasting legacy of those different projects. So I think I will throw to my panel and just putting you on notice that we're open to questions from the audience later on. And I'll start with you, Alyssa, and I'm putting you in a position to explain to our audience the unique system in Australia, and this is really why we wanted to present this at the Australian Pavilion. The ACCU scheme is about 80% land sector projects, so they are nature-based climate solutions. So we have a really good framework, high integrity framework, with considerable methodologies covering different vegetation and agriculture type projects. So I'll leave it to Alyssa to really talk about the ACCU scheme, quite a high order, and also really looking at the opportunity in Australia to be a provider of nature-based climate solutions.
Thanks, Janet, for that introduction. So I thought I'd give you a high-level overview of the scheme that we've had in Australia now since 2011, and explain to you what type of project activities can be undertaken under our scheme. So this was a scheme that was introduced as the Carbon Farming Initiative, so the name kind of gives it away in terms of a very strong emphasis on land-based activities, and that really has sustained the scheme as it's morphed over its journey so far. So the scheme allows projects to be registered through the Clean Energy Regulator, which is our regulator that looks after different environmental schemes in Australia. There are, as you would expect with these types of standards, different methodologies in play under which you can undertake the projects. And then as a result of implementing the projects, you have the opportunity to generate our credits, which are called Australian Carbon Credit Units, or ACCUs for short. So, as Janet said, the majority of scheme activity to date has been in the land sector, particularly around vegetation projects. We have really kind of three tranches of methodology types under the kind of the land sector branch. So first of all, we have methodologies that can be undertaken in the agricultural sector. So that might be things like feeding different types of supplements to cattle, or dealing with different fertilisers in cotton irrigation activities. But to date, far and away, the most uptake in our agriculture sector has been soil carbon. So that's really looking at how you increase the amount of carbon that is stored in agricultural land. And that activity can be done in a number of ways, but essentially it is often looking at how you convert cropland, for example, into pasture land, how you can get better fertiliser through compost or manure, etc., into soil. Different activities that really will increase the sequestration in the soil. To date, we've had a lot of projects registered under that methodology. We've had less credits issued, but I would say that my perspective on this is Australia has been really at the forefront of developing appropriate soil carbon methodologies and then implementing projects under that methodology. Another really interesting activity type that we have in Australia related to the land sector is savanna burning. So this is essentially where you go mainly into the top parts of northern Australia and you burn our savanna grasses early on in the season so that we have less intense burning activity later in the season. And you can generate carbon credits essentially for the reduced emissions that results in. And this is a wonderful project type because it's had huge engagement from our traditional owners, very much based on their cultural burning practices. And as Janet mentioned, the wonderful thing about this particular methodology is that really strong co-benefit component of involving Indigenous communities and allowing them to achieve a value from this type of activity. And then the last kind of project type is vegetation projects. So they involve new planting, so going and planting native vegetation across different landscapes. We also did have an avoided deforestation methodology, so obtaining credits for not removing trees that have had a permit to remove those trees. But the most popular project type that we've had to date is what we call human-induced regeneration, so HIR for short. It's a bit of a mouthful, but that is essentially taking away human activities that would have traditionally stopped the land from naturally regenerating. So, for example, it's taking off the livestock, taking off the cattle, taking off feral animals, stopping historical clearing practices, so maybe fencing areas so that the areas can naturally regenerate. So that has been definitely, as I said, by far and away our most popular project. It's generated about half of the credits so far in our scheme, and obviously a huge amount of projects have been registered under that methodology. That methodology has just come to an end now, so we're now working on a new methodology which will allow different elements of land-based activity to take place in a kind of agricultural context. So we're expecting that opportunity to come forward in the new year. So I might leave it there, Janet, but happy to take questions.
Yeah, thanks, Alyssa. That was a great overview. And I think something like human-induced regeneration and a lot of these projects are actually complementary to traditional farm practices. So they don't require taking land out of production. They're actually complementary practices. And some of the co-benefits, I guess what we're seeing as a result of these projects is that they're actually increasing productivity on the land and also building resilience, which is really important in a changing climate. Building climate resilience and resilience to drought. So if you've got more vegetation inland, you have more soil organic carbon, then you're actually able to draw down and stock greater water quantities. So these types of projects, and we've got about 1,000 registered at the moment, are actually, building up resilience for farmers as well as driving. I always like to say it's a transfer of funds from driving funds from the city into the rural and regional communities, which is really important. And on that note, we will talk a little bit about money because, this is an important factor, I guess, for nature-based climate solutions. The UNEP State of the Environment report said that if the world's to meet the climate change, biodiversity and land degradation targets, we need to close a $4.1 trillion financing gap to nature by 2050. So a really significant amount. When we look at the current financing for most nature projects, about 86% of that is public funding. Only about 14% is private sector. And that's really where we need to be driving private sector funding into these sorts of projects. And this is where nature-based climate solutions or market-based mechanisms provide a means of engaging the private sector. And on that note, I might jump straight to you, Matt. You represent obviously a major Australian financial institution which operates in global markets. And I wonder if you can tell us about finance or capital investor, from a capital investor perspective, what your engagement is with nature-based climate solutions.
Sure, thanks Janet. And for anyone in the audience who's not familiar with the Commonwealth Bank, we're Australia's largest financial institution, and as you say, we do operate in international markets as well. Look, we think nature-based solutions are a critical part of the pathway to net zero. We're committed to supporting Australia's transition to net zero, and some of the statistics Janet shared just show very clearly how important nature-based solutions are in that pathway. In fact, some research published by the CSIRO last week sees negative land use related emissions contributing more than 100 million tonnes of effectively sequestration by 2050. In the global context, it's in the gigatons, so this is clearly a really important part of the transition to net zero. But it can also deliver a range of other benefits. Farming for the Future just published some research that indicates a positive correlation between practices that conserve and repair nature and economic returns in farms, as one example. And Janet's also touched on some of the social benefits of nature-based solutions in the context of engaging First Nations folks, for example. So there are a range of benefits associated with nature-based solutions beyond just the sequestration potential. And I guess somewhat unsurprisingly in that context, we're seeing quite a lot of demand and interest in nature-based solutions. So that comes through, for example, in the price premium that we observe in ACCUs that have the co-benefits or core benefits. It's a useful framing. we're seeing sort of 50 to 100% price premiums on ACCUs that have those co-benefits. And the Savannah burning methodology that Elisa spoke to, that price premium is even greater. So what that's showing is clear demand in the market for ACCUs that do have that sort of high-quality nature-based sequestration. We're seeing interest from our agricultural customers who are eager to sort of participate in these activities to drive economic benefits along with the broader environmental benefits. And we're also seeing strong demand amongst our institutional customers, so large businesses who are purchasing carbon credits to really lean into this space. And in fact, the Commonwealth Bank's own offsetting program focuses on Savannah burning credits as well. So it's a core focus for many of us. When we talk to our customers, actually financing is identified as one of the largest barriers, and so it's an area that we're really trying to lean into as a bank. A number of products on the lending side, along with a number of products in the market space as well, and a few investments which I can perhaps talk to a little bit later on. But we're really seeing quite a lot of a clear market signal emerging in the context of a solution that can have benefits from an emissions perspective, along with a wide range of other benefits as well.
Thanks, Alex. And I think we'll just come back at talking about investment to our birthday girl, Stephanie, who's got many years of significant experience in this space, in the investment space, and currently working for a leading investment company. Can you just talk us through a little bit about the spectrum of appetite and type of investors, and also, I guess, where you see the investment going? We're seeing at the moment increase in prices, as Alex alluded to, for nature-based climate solutions, but what's the appetite and is it increasing, and where do you hope to see it go?
Thank you. Good question. And for my birthday, I would like all of the money in the world to meet the financing gap for nature-based solutions. So if we could solve that today, that would be great. Perfect. I guess kind of picks up from what you were saying. I think the market is actually, and the appetite of investors has changed quite dramatically, even in the last couple of years. So Carbon Growth Partners is 2.5 years old. We're a dedicated investment manager, predominantly focused on the international carbon market, but we also have investments in Australia, but we're an Australian-based investment manager. And we set up our business, the kind of 4 founding partners, 3 of us came out of a large global conservation organisation. And the reason that we set up the business was because we were seeing significant demand and investor appetite to get access to carbon as a thematic, and particularly nature-based solutions. So kind of part of the evolution of the investor interest is part of the reason that our business exists. But even over the last couple of years, we've seen quite a significant shift in the type of investors. So we have 4 funds that we manage within our business. Our first fund was predominantly sophisticated individuals. So high net worth, ultra high net worth individuals who were looking to get access to the carbon kind of thematic. They saw that there was an opportunity there. Many of them impact focused, but many of them seeing, I guess, the global imperative to be engaged in that market. But the investors that we have have also shifted over time. And so we're seeing significantly more interest from impact-focused investors, single-family offices, multi-family offices, and now increasingly more investor appetite from institutional investors. But one of the challenges there is scale. And so many nature-based solutions, if you're a superannuation fund or a pension fund for the non-Australians, you have quite a lot of capital that you need to deploy. And the amount of time and energy that it requires to understand the nature of a nature-based project in comparison to more traditional asset classes is a real barrier to unlocking capital at scale. And so one of the things that kind of we see is the need to match the type of investor you have with the opportunity. And so many of those original investors that we've had in our funds, who are individuals, very impact-oriented, but operating on a smaller scale, might be more willing to take early kind of upfront risk and engage in either buying, carbon credits from a project or investing in, the feasibility and due diligence that's needed to get a project to the start line. But they're not going to be the same investors that allow us to meet that, $4 trillion gap that we have in nature-based solutions. And so there needs to be an opportunity to then shift that to those investors that have the opportunity to bring in scale. But with that, you need the opportunity to de-risk that, to make it a very easy to understand asset class, so that when you're speaking to a pension fund or a superannuation fund or an institutional investor, they're looking and comparing how they allocate capital. How do you make a nature-based solution stack up? Helpfully, I think there are a few things that are happening in the global context that are allowing that to happen. So, Matt and I were talking about this earlier, but the context in which we're all operating has changed, and particularly around nature-based solutions. So if you looked, 5, 10 years ago, I think there was much more understanding around the need to engage in the climate space. Maybe the dollars weren't flowing at that point in time, but there wasn't as much of a driver around kind of nature-based solutions. They sat largely in the hands of kind of philanthropy and governments. Still true based on the stats that you've mentioned, but we're seeing things like the Task Force on Nature-related financial risks and disclosure legislation, and thinking about biodiversity risks. That is now accelerating, I think, at a pace, and the understanding around natural capital alongside climate that starts to create the context where increasingly there's an expectation for large investors to start to engage in nature-based solutions. I don't think we're necessarily there yet. I think some of the knowledge gaps that are required for really large-scale investments are a challenge. But hopefully, I think the carbon markets provide a framework and a scaffold, the backbone, to facilitate the investment in nature-based solutions as part of that overall kind of range of solutions. And I think separating them, biodiversity from climate, has some real risks. And so I think the idea of incorporating nature and talking about the core benefits is really helpful when you're starting to really channel finance at scale.
Thank you. And Anna, last but not least, Pollination is a very large climate change advisory and investment company, and I wonder if you can just talk from your perspective and business perspective around nature-based solutions as a commodity, the growth in that commodity, and also, I guess, some of the drivers. And Steph just touched on TNFD, the Task Force for Nature-Related Financial Disclosures. We will see that coming down the line as a major driver, but what are some of the drivers currently that you're seeing in the market?
For demand drivers.
Demand drivers.
Yeah, okay. So just adding my acknowledgement of country and recognition of First Nations knowledge and heavy lifting for nature. Prior to joining Pollination, I worked for a power utility in Australia that bought a number of carbon credits. And so I have some perspectives on the demand side and what it is that prompts a company to participate and to buy these products, spend their money. And also through my work with Pollination, working with clients, I see their experiences and reasons for buying. And there's three drivers that are currently very much present. One is compliance schemes like Australia's safeguard mechanism that requires companies in certain classes to buy carbon credits, and naturally enough, some of those carbon credits are nature-based solutions, and so you see associated demand through that pathway. There's a whole lot of enablers that are quite relevant to the volume. If you have good capability within a company to understand the type of carbon credit that you're buying, the nature-based solution and the co-benefits that surround it, if you have good advice and good vetting and good support to validate through the life of that project the quality of what you're receiving, if there's good trading available, all of those enablers are quite relevant to scaling that demand. And then perhaps most importantly from my perspective, it is driven by the extent to which voluntary buyers can access a green halo from participating in the market, and through accessing that green halo that they can manage the costs associated with buying those certificates. So they buy the certificates, they access the green halo, and they're able to charge more or have more loyal customers or access new customers and thereby cover the costs of participating. The green halo concept's kind of fraught because there's a lot of things that contribute to the green halo. Participating in the purchase of really high quality, beautiful nature-based solution certificates is one thing, but irrespective of participating in that way, everyone is assessing the climate credentials of companies based on their decarbonisation plans and the credibility that they demonstrate in marking out progress towards decarbonisation. But of course, the best performers are active in carbon credit markets and are doing both absolutely at the same time. On capabilities within that set, I think it's an interesting observation that as companies realise the complexity and the number of parallel objectives for participating in nature-based solutions, I'm seeing a growing realisation that they don't necessarily want to do it all in-house. And so there is a reliance on services and partnerships at different parts of that value chain. The release of the recommendations of the Task Force on nature-related financial disclosures in September, and then overlaying the November release of the legal opinion of Sebastian Hartford Davis and Zoe Bush, which found that company directors have a duty to consider their nature interfaces and nature-related risks. Both of those developments you might expect will result in a more thorough consideration of nature interfaces for the carbon credits that they do buy. And so where previously companies might have bought carbon credits from a monoculture, maybe we're going to see more and more environmental planting and projects that can demonstrate accompanying benefits. But it is really early days. Those sets of guidance have only been formalised in the last couple of months. So I think we have a clear direction of travel, but we'll be watching.
And thank you for mentioning that watershed piece of legal advice. That's only recent and really critical, I think, as another key driver. You know, directors are on notice that nature is something that they're very much responsible for as well. Elisa, integrity matters. I think if we can draw we'll talk about generally the integrity of credits and nature-based climate solutions as we're talking about projects that are often working across different land tenure arrangements. They're involving a different number of stakeholders, a different number of communities, and often traditional owners. You know, the integrity and what sits behind these is really crucial. We have had, a few concerns around integrity, both in Australian market and global market, and there are a number of emerging frameworks, such as I'm going to talk acronyms, but the Voluntary Carbon Market Initiative and the Integrity Council for Voluntary Carbon Markets. So I wonder if you can talk us a little bit through that and what's also happened in the Australian market to safeguard and ensure the integrity of these projects.
Thanks, Janet. So yes, integrity has been a big theme in recent times, obviously in voluntary carbon markets, and it has two components. It's integrity at a project level and ensuring the actual genuine nature of the credits that are being generated, but also at the higher order level, the integrity of companies being able to use carbon credits as part of their decarbonisation strategy. But if we think about integrity in the nature-based solutions context, obviously there are a few key aspects that need to be considered. Probably a number of these are fundamental principles that are operate against under any scheme, but I guess key in the nature-based context is additionality. So this is obviously of most significance when we're talking about avoiding deforestation. So what's the baseline against which we make that assessment as to whether there would be loss of existing vegetation so that we can then credit the retention of that vegetation. And that can be very challenging in terms of establishing what that appropriate baseline is, and we have seen issues emerge in the voluntary market where perhaps that baseline hasn't been as robust as it needs to be. Another really big issue that comes in for nature-based solutions is the one of permanence. So how do we ensure that the vegetation or sequestration that is going to be put in place through our nature-based activities will stay there and not be lost? And that's particularly important, obviously, when we're thinking about the role of these projects in terms of their offsetting component, which is to ensure that it's an offset of 100 years or so of greenhouse gas emissions in the atmosphere. So there are ways to obviously address that, and most of the schemes and standards have found ways to look at how you deal with that risk of reversal. Obviously, in an Australian context, one of our largest risks is bushfire risk. So, you know, if you're doing a new planting or if you're trying to achieve that natural regeneration that I talked about earlier, what you want to do is make sure that the risk of bushfire impacting that vegetation is minimised. So there are quite strong requirements in terms of bushfire management plans to address against that risk. But ultimately, when you think about it, there needs to be some kind of buffer or mechanism to account for that loss, which may happen from a natural occurrence, but can sometimes happen from more deliberate activity. But that's generally the best way to kind of manage that permanence issue. But I think the one that you touched on, Janet, and I think the one that needs the most attention as we move forward is the benefit sharing. It's how we ensure that our Indigenous people and traditional owners of the land, I think I heard the stat, I hope I've got this correct, that about 70% of the world's landmass has land tenure by Indigenous people. It's how we can assure they are properly acknowledged for their role in caring for our nature. And Janet put me onto this, so I'm going to give it a plug, which is that the Nature Conservancy have done a really good paper on that benefit sharing approach and how we properly account for Indigenous communities' participation in the carbon market. And so there are some really good best practice suggestions about how we can do that. And in an Australian context, and we've seen this with some of the clients that we work with, it's not just, if I can say it this way, tokenistic financial amount that comes out of these projects. It's actually the long-term benefit of having the engagement with the traditional owners, being part of the project, helping with project activities and ensuring those benefits go back to the communities, whether it's through education, training. In some instances, my clients have put in place housing, you know, assisting with schooling. So there is a need to ensure that there is real, true benefit sharing for their contribution in terms of these projects. So I think in terms of an integrity layer, that for me is an absolute fundamental as we move forward to expanding this market.
Absolutely, and thanks for mentioning that paper, Alyssa. It's actually called Beyond Beneficiaries, and I think what's really interesting there is that, and we often say it's beyond consent as well. So these projects, there's a requirement to get free, prior and informed consent. Consent is an ongoing process, and it's not just you'll be the beneficiary of. What we actually want to see in high integrity nature-based climate solution projects is traditional owners actually owning the projects. You know, that they are actually not just beneficiaries, but they're leading these projects. They're partners, true partners in a project. There is a proper and formal revenue sharing arrangement that is actually equitable as well. So these are really, you know, key fundamental linchpins in these projects and high integrity projects. Stephanie, I think from a Carbon Growth Partners perspective, you've invested or brought finance to the development of a lot of nature-based climate solution projects. And just to make this a little bit more tangible, because we're talking a lot about nature-based climate solutions without actually really identifying a project. Maybe you can give us a bit of a showcase project, and talk about also, I think what's important, because you're obviously talking with investors, with companies, how do you get buy-in in the boardroom?
Yeah, good question.
It's $1 million question.
I might use a tangible example from our portfolio. It's an international project that we have. We have a joint venture for a blue carbon, both conservation and restoration project in Mexico. And the way that that deal is structured, we have it's a partnership. We have a local on-ground partner who is delivering that project. Most of the work and the landowners who are involved in that project are groups called ejidos, which is communal but privately owned land, similar to some of the land tenure that we have in parts of Northern Australia. And from the outset, the benefit sharing has been at the core of the way that that deal was structured. So 60 to 70% of all of the economics actually go back to the local communities. So that goes through the employment of ejidos who are undertaking conservation and restoration work on their lands. It also includes using local providers where possible, rather than importing goods. There are boats, there is, you have to do channel restoration work, and so there's earthworks, all of those sorts of things. Where possible, we try and buy all of the machinery that's required locally, or it is built locally. And there's also a formal profit sharing arrangement in place. And so we share the profits 30% between us as the investors, 30% to the project developer, and 30% to the landholders. And that is upfront from the beginning. It is in the carbon assignment agreements with local landholders. It is very transparent, and we think that's incredibly important for a number of reasons. Part of having that transparency, to your point around free, prior and informed consent, is it's an ongoing process. And for us, part of the certainty and success in a project comes from doing a project well and involving, as partners in that process, the local communities and local people. And it's quite a successful model, and there are models, including in Mexico where we're operating, where that hasn't been done well. But also, one of the challenges is with those models, and we're quite lucky in that most of our investors are quite aware of, and there's been quite a lot of public scrutiny over benefit sharing. That means when we've had conversations with our investors, there is not a doubt in their mind. They do not want their returns to come at the expense of the local people who are the owners of that resource. So for that kind of component, that hasn't really been a challenge for us. But one of the challenges is looking for, when you're doing a project like a nature-based project, a conservation and restoration project for blue carbon in Mexico, there's country-level risk and sovereign risk. So what is the cost of capital to work in those places in comparison to choosing, and particularly when you're looking at nature-based solutions and solutions like mangroves, they exist largely in developing economies where costs of capital are more expensive. So how do you ensure that the rates of return are still attractive to those investors? How do you manage the risks when you're starting at a greenfield project development that is going to take somewhere between, depending on the project, anywhere between 2 and 5 years to start delivering carbon credits and revenue back into that project, and somewhere often between 7 to 10 years before their capital is returned and you're providing a return to investors. And for this project, it's a 30-year project, which means that those investors, unless you, if you've created a permanent capital vehicle, are in that investment for the long haul, unless you decide to sell that project to somebody else and looking for those returns. So there are some barriers in having those conversations. It's one of the reasons that I think many projects struggle to get finance. And it also kind of minimises or makes the opportunities to invest in more challenging to find projects that are going to be able to be well-communicated investors and to bring them in. But it's also the reason that as a company we exist. So part of the reason that we exist is to bridge that gap between the investor and those projects, and to be able to translate that in a way that those investors can understand the risks, and also they can trust that we're managing them well and engaged in the day-to-day, and that we're looking for those sorts of things that Alyssa referred to in making sure it is a good project. And so there's a lot of reliance on our advice and our guidance and our expertise in that process, which I think is, particularly important to give investors confidence.
Thanks, Steph. And when you think about these projects, they're often quite complicated structurally. There's a lot of different stakeholders involved. They're quite complicated projects. The methodologies are very rigorous and very difficult. They are quite complicated. And I guess, Alex, my question to you, and again, $1 million question is what can we do to de-risk these investments? And also just an additional question is what sort of innovative financing projects are you seeing emerging?
Yeah, absolutely. I mean, some of the things that Stephanie talked to in terms of the risks and the challenges in accessing financing are certainly consistent with what we hear from customers. And the answer is there's innovation happening across debt, equity, and risk management markets to support the development of these sorts of projects. So if we think about debt, that's usually going to be in the more established methodologies and practices where there's a little bit less uncertainty. Certainly from our perspective, we've tried to innovate in terms of sustainable finance. We've an agri-green loan designed to support customers that are taking regenerative practices and developing carbon projects. It's effectively discounted finance to support those projects. We've also established a carbon prepayment product, which effectively aims to change the financing structure of carbon credit projects. So there's effectively a prepayment against the credits that will eventually come from the project, which gets at the time lag that Stephanie was just talking to. So we're doing a few things, seeing a few things in terms of the debt side, but that's often going to be more aligned to the better established practices and methodologies. But we know this is a space where there's a lot of innovation in terms of those methodologies. Stephanie talked about blue carbon in a kind of mangrove restoration context, but then we've also got things like increasing the alkalinity of oceans to sequester carbon. There's some really innovative technological practices out there, and inevitably things like soil carbon that Elisa talked to before, inevitably those newer, more innovative practices are going to carry a different type of risk, and that's where equity has a really important role to play. So one of the things we've done at the Commonwealth Bank is invested in a fund called Wallamai Capital. And Wallamai is an Australian/US based investment house. They're very focused on nature-based solutions, among other kind of energy transition thematics. And what they're trying to do is find projects that are, in that near proven space and then really scale them up. And that's an area where equity investors with a different sort of risk return appetite might be better placed to step in. And then obviously over time you work towards scaling right up to the institutional investment space. There's a number of sort of innovations happening in terms of sustainable finance constructs that also play into the equity space, things like sustainability-linked lending as an example, that all of which can kind of come together to create the right incentives to get these sorts of projects happening. And then in terms of risk management, this is also an area where we're quite active in managing, helping customers manage price risk in the ACCU market, so hedging in ACCUs. Now that's possible in a market like the ACCU market that's got some liquidity. In the nature space, we've got an emergent market in the context of the nature repair market. Bills introduced in Australia earlier this year, and we're expecting that to come in the coming years. Now that over time, as liquidity enters into that market in whatever form it takes, being able to help customers manage price risk is going to be a really important piece as well, which comes back to de-risking those investments. So a bunch of things happening across debt, equity, and risk management to try to help these projects get up.
Wonderful, thank you. And Anna, to pollination. So pollination often talks about its projects being good for nature, people, and planet. And I'm wondering if you can also give us a tangible example of one of your investment projects and also how it's creating or how your projects create returns for investors.
Yeah, so I think there have been some really helpful comments about trying to get across the lag of time up front. what we continue to see is the importance of partnerships and multiple participants to bring forward projects, less concentration in one investor and more groupings. I have some phenomenal colleagues doing really interesting work in a part of the business that is focused on investments. It's not the part I work in, but I'll do my best to do it justice. There's a project called the Delta Blue Carbon Project. It's a great example. It is in the Indus Delta region of Pakistan. The plan is to plant and regenerate mangroves over an area of about 400,000 hectares, with the intention of producing 250 megatons of carbon dioxide drawdown over the 60-year life of that project. And I was thinking about this project as I took the taxi to my hotel when I arrived from the airport here in Dubai. My driver for that ride is a Pakistani gentleman. His wife and children are in Pakistan. He was describing it's really hard to find work where he lives, and so he works here. And I was reflecting on just the significance at a human level of the creation of the sort of jobs that are described in these projects. This project is so big, it's 21,000 jobs anticipated. It's a public-private partnership involving the government of Sindh, the area, and a couple of other participants, Pollinations One, but on-the-ground expertise and on-the-ground representation of the people who hold the knowledge and ultimately need to take pride in and benefit from and invest their own efforts into the asset that will be so transformative to their region. There's so many benefits if a project like this is well done. There's obviously good return to the investors. There's quality production of carbon credits that have traceable and demonstrable benefits in all of the dimensions that we've described. And there is the regenerative impact both for nature but also for local communities that suffer as nature's depleted around them. There are other examples. Pollination has a memorandum of understanding with the Indonesia Investment Authority to scope out development project opportunities. Multiple examples of these types of location-specific, place-based solutions that bring in participants from the location, layering in international capital and the prospect of solid markets.
That's great. And blue carbon is not unique to the international market. We actually have a blue carbon methodology in Australia as well, which is around the reintroduction of tidal flow. Steph, I think you wanted to jump in there.
I was just going to add that Anna's being very humble about that project. It's the world's largest blue carbon project. We also invested in it, but that's not why I grabbed the microphone. It's a great example.
It's a good example, yeah.
So with the extreme flooding that happened in Pakistan, one of the phenomenal benefits of that project and the restoration that took place was the significantly lower, loss of life, damage to houses, etc. The damage that occurred as a result of those floods was significantly less than they anticipated because of the large-scale restoration that had taken place as part of that project. And so, I think often we think about the co-benefits kind of in the immediate, and one of the things I was just thinking about we haven't talked about with nature-based solutions is the adaptation benefits and the significant adaptation benefits that you get from nature-based solutions in comparison to other types of carbon projects. And anyway, we think it's a fabulous project, and I just, credit where credit's due, but the adaptation benefits of that in real time, as well as the benefits to species, but it was a really phenomenal outcome as the result of a project that wasn't intended to have those benefits. So, anyway.
One other example of projects having really transformative effect is here in Australia. We've got a lot of regions that are going through major transition as we decarbonise. We're seeing parts of the economy that have long produced energy and high emissions activities progressively closing down. And the economic potential of nature-based solutions coming into those regions and providing jobs, restoring lands adjacent to industrial precincts that have experienced damage. Really don't underestimate the significance of nature-based solutions in the economy as part of the energy and other decarbonisation transitions.
Absolutely, and I was going to say the adaptation piece is so important. These projects not only have sequestration potential but significant adaptation, and blue carbon is great in terms of coastal resilience and building up protection against increasing storm surges, for example, but also creates a terrain for fisheries, aquaculture. There's so many great benefits out of these. But on that note, I'm going to throw to the audience and see if anyone has any questions.
Do you want a mic? Yeah, go for it.
Thank you very much. I'm from Japan. I'm not Australian, but I was in the TNFD task force member team. I was alternate. But my question is a little bit different from a little bit different perspective. It's about insurance, because you talk about adaptation and also you talk about the increase of the resilience. And thinking of that, do you have that kind of insurance scheme which rather prioritize that type of traditional agriculture methodology or that kind of thing? Because I heard that in US, the insurance scheme is totally opposite. Because that insurance scheme over there is based on the assumption that chemical input secure the yield. That means regenerative agriculture is outside of the insurance coverage. They need a change of the regulation. So how do you think that the possibility of having more favorable insurance scheme to promote that kind of the nature-based solution? I do not have any good idea about insurance scheme itself. So how's your situation?
I'm not an insurance expert, but I will give it my best go. So I'm not sure about the insurance products that exist, I guess, or are offered widely in Australia in those sorts of circumstances. Not many, Alyssa's saying. It is one of the big challenges, and I think the opportunities, particularly as you look at nature-based solutions. There's often a presumption that a nature-based set of infrastructure is in some way inferior to the traditional engineered infrastructure that our economies have been based on for many years. And part of that has been, and kind of many people have pointed to, a lack of data there. And so one of the things that Alex mentioned before in the Farming for Our Future, was that the name of the project? Farming for the Future. There's been a lot of effort around quantifying the benefits that come from nature-based solutions, either in decreasing risk or increasing productivity in an agricultural landscape, or looking at the role of nature-based solutions in terms of coastal protection. There has been more interest in and products developing parabolic risk insurance that looks at reduction in storm surges from having nature-based infrastructure offshore, highlighting areas of flooding. But I think that the insurance industry is often kind of data-led, and so there isn't always the history or extent of that data to allow new products and for the risk to be priced, because at the core of insurance is a risk-based pricing system, and the data sets need to exist there. But I do think there's recognition, and there are products internationally. I used to work at the Nature Conservancy. There was a product that was developed which involved a reinsurer, hoteliers, protecting coral reefs, those sorts of things. So there are more of those models that I expect to be rolled out. But I would say most of it's focused on kind of crop insurance and those sorts of things in an ag landscape. But if anyone else knows the answer, feel free to.
We had a question over here, so while the mic's moving, I might just say as well that, parametric insurance, there are different insurance products coming to market, but particularly in Australia in farming, farming communities are typically the most underinsured or uninsured, sector. And I think we really need to see a change in the insurance industry, because vegetation is often associated with risk. in terms of insurance.
And I would
you
say
know,
internationally in the carbon market, there's a lot of work being done around the offering of insurance products. So within the Australian context and farming in particular, I'm less aware of what's happening there, but there is a really strong push around insurance for nature-based carbon projects and where that sits and how you price that risk, as well as ensuring contracts and deals that are done for carbon projects. And the World Bank, for example, is starting to play in that space, but slightly different to your question.
Hi there, Mark Tilley here from Carbon Pulse. I'm just curious if the panel could comment on the Australian government's emissions projections that they released last week, specifically to do with ACCU demand projections that are expecting ACCU demand to peak at around 2031, and whether you see, and that's primarily as a result of the safeguard mechanism. I'm wondering if you have any sort of opinions on those projections, whether you think they're accurate, or and whether you think the government will introduce further policies down the track to encourage more demand in ACCUs going forward.
No one wants to take that. I suppose a few comments, but Anna, you should maybe talk within the context of broader decarbonisation. What we're going through in Australia is a net zero plan, and they're looking at sectoral pathways. At the moment, the safeguard mechanism is only in the industrial sector, and we're currently looking at the agricultural and land sector pathways. And I would think that, you know, in each of those, we're examining what the role of carbon credits is in the decarbonisation of those sectors. So we're really only just kicking, you know, the first can. In the industrial sector, I think there's a lot more broader economy utilisation for credits.
Yeah, I don't think there was a particular issue that I'd take with those projections, but I would say that as we work through the global stocktake at this COP, as we see nations developing their updated NDCs, potentially that will stimulate some further thought. And as we perhaps enter into an era of temperature overshoot, we're already, you know, we experienced a day above 1.4 degrees of warming. Globally, it's 1.1 to 1.3, depending on the region you're in already. So the likelihood of overshooting 1.5 seems high, and the relevance of drawdown seems even more profound. So I can imagine that there would be settings at some point to encourage that drawdown, but lots of moving parts, lots of different sectoral pathways.
One here and then here. Just here.
I've got a follow-up question on the demand driver discussion. Obviously, the move towards compliance markets globally is really important in terms of stimulating demand for investment. But we've also seen the development of, as Janet mentioned, these integrity standards internationally with the ICVCM and the VCMI, and they've been described as now potentially an end-to-end solution on integrity alongside things like Science-Based Target Initiative and Greenhouse Gas Protocol. What do you see as being their significance in terms of demand, and how should governments lean into them?
I feel like that's like a Dorothy Dixer that Kurt threw at me for my birthday. So one of the things that particularly this morning there was an event in the Green Zone which was about the end-to-end integrity framework, which includes a number of key steps. First, to measure and account for your emissions as a company, so using the Greenhouse Gas Protocol to set a decarbonisation strategy and pathway with targets using the SBTI, then using the Voluntary Carbon Market Initiative's Claims Code of Practice. They've both called them CCPs. It's incredibly unhelpful to both decarbonise and offset, and then the ICVCM with their core carbon principles outlines what offsets you should use. And so in the international market, one of the things that I think many companies have been relying on or used for, I guess, a lack of progress has been the lack of clarity or clear guidance that's end-to-end about what they should do and what is expected of them. So I think that sends a really strong signal to corporates about what is expected of them and what is best practice, or kind of minimum expected practice now. And so I think those governance frameworks are really starting to put to bed some of the concerns around the market. And so with kind of two aims, the ability for companies to have clear guidance about when they should be using carbon credits and what their decarbonisation pathways should look like. And then also giving people confidence to kind of get back in the water after some of the integrity challenges that there have been in the market. Interestingly, in Australia, we already have an end-to-end framework through Climate Active, and we've had that in place for many years. And I think that there is a lot that the international market can learn from initiatives like Climate Active, where the government have backed and put in place kind of quasi-regulation of the way in which voluntary demand is met. And I think that there will be more and more governments looking at that end-to-end integrity model and looking at how they can support voluntary action as well as compliance action. And that framework is really seen as the precursor to starting to scale international markets and demand for those markets. So I think they're really important. I think one of the things we need to do now is, you know, the carbon market is evolving. There have been questions around integrity. There's been a lot of governance work that's been done in response to that. Those processes have now largely been settled and they're now being implemented. And so it's about how do you then use those as the basis for companies and corporates to feel confident in being able to participate, and how countries can leverage those models as well.
Can't resist adding just a little that companies will always be taking decisions with an informed perspective about their reputational risks and the drivers of their counterparties, their stakeholders, their observers, the customers, and they'll be responding to the particular expectations of that cohort. And so you might see some variation in what's driving individual business practice around what they want to buy that may not conform to a technical standard that we can speak and understand in our technical area of operation. So I think that lens of reputation remains really relevant for business.
Thanks, Anna. And with that, we are actually out time. But so I just might get you all to wrap up, and you're up in the firing line first, Anna, as you have the mic, just with a little, I guess, summary of how you would, what's your elevator pitch for investment in nature-based climate solutions?
So we need to go where the nature repair is needed, and that means doing projects in concert with knowledge holders and First Nations people, and it means doing projects in concert with finance providers.
I think nature-based solutions present an incredible opportunity for reducing emissions, delivering broader nature-related benefits and also social benefits if done well. So I encourage you, whether you're if you're a farmer who's interested in participating, if you're a corporate who's interested in purchasing, if wherever you sort of sit in the ecosystem, this is an area that is worth backing, particularly because of the opportunities it presents for Australia.
I would agree with both of those, or do agree with both of those, and I'd add, just get started. I think there's a perception often that you need to have figured everything out and everything needs to be perfect before you begin. And I think there is I guess a lot of kind of tolerance within the nature-based solutions space to get started, to start small if that's where you need to start. If you're, you know, more progressed on your journey and want to take a kind of larger kind of risk or make a larger investment or whatever that looks for you, I think just get started. There are lots of opportunities, but there are increasingly even more areas of expertise that you can tap into, guidance that's available that is designed to make kind of dipping your toe in the water much easier than it would have been kind of 2 to 3 years ago.
I think the value of nature-based solutions is we're addressing two issues in one, which is climate mitigation and protecting and restoring a natural environment, which are both two critical issues facing the world at the moment. What we've got to do is we've got to start the investment flow ASAP. We've got to get to a scale where we get institutional investors coming in. The risk profile is obviously essential to that, so we've got to address the integrity issues. But really, it's essential that we get that investment happening and as fast as possible and at scale.
tripling in investment, as I said at the start. And my conclusion, I guess, for high quality, high integrity nature-based climate solutions is that they contribute to climate, land and history repair. So triple whammy. With that, I'd like to ask you to join me in thanking our panel today, Anna, Matt, Stephanie and Elissa. And again, happy birthday to Stephanie.